Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, September 12th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. Right now, you'll see inside day heading into the RTH Open, a narrow range session as well. We can update the ADR down here to reflect the current session, or the current developing session. You'll see how narrow this range is, just 30% of average range at 12.25 points of total range right now. This thing's been averaging about 38, 40 points per day, and so this is a developing average right here, but the previous day's finishing average is 41 on a 10-day basis and 39 on a 5-day basis. Right now we're at 12 points, so very, very narrow as we head into CPI Wednesday. We have inflation data Wednesday, PPI on Thursday, so a lot of the big movement could be early tomorrow on a Wednesday. Right now, the previous session's range likely set the edges, and we could be range bound within these edges here today for a 2-day narrow range. If we drop down to the previous session's low, that could provide a bounce back up within the range. So right now, likely building out a 2-day narrow range as this thing heads into Wednesday's market. And currently with an upward bias. An upward bias at the moment, higher lows, but sitting just below major resistance at 45.50. So it's going to be interesting to see which way we go out of this 2-day range, but looking for further development until proven otherwise. A failure to hold the previous session's low starts to work toward a gap fill back toward the previous week's close. All right, let's take a look here at the NQ. You'll see right here the NQ looking similar to the ES, trading 30% of average, inside day, super narrow, 62 points of range, and on a finishing basis, this thing's averaging 205 on a 10-day basis and 200 on a 5-day basis. So about 200 points per day on average, but look at the averages are dropping significantly here as they had been closer to 400 a bit earlier. So right now, very quiet here as we head into inflation data ahead. Again, a failure here to hold the previous session's mid, and you're opening up a rotation back to the previous low. Given the short-term upswing here, we could bounce right back up and remain within a 2-day narrow range heading into Wednesday's session. Again, as we mentioned with this one, the uptrending market remains firmly intact at the moment in terms of the longer-term trend here for the year. You can see the channeling behavior that's played out. We've discussed this pattern here before and how it looked very similar once we got that pivot high. We've now broken it and we've defended here and have actually pushed back toward those highs. So this is looking very bullish in terms of the potential that could be ahead, especially if this thing starts to work higher through the 15.7, 15.8 zone here, and eventually 16K, which could really open up the upside. So we'll continue to watch this zone here, but overall, being a bit range bound here, inside day ahead of CPI Wednesday morning. Let's take a look at crude oil. Now this one's a bit more bullish here today, up 0.8%, but is sitting at the top end of a very narrow developing range. An ascending wedge as well, a reset bar here, which has really helped to ID both edges and both extremes of the range. The last time a pattern like this developed here at or near these highs was back here. This kind of reset bar after a big headline risk gap up. This thing went sideways for multiple days, and then there was a trap and reverse that happened. So we'll watch to see how this thing develops here up ahead. Do we get a similar pattern up ahead? If we get a trap in reverse, we could be looking at a backfill toward 80 half down below, which is the previous week or previous year's close price. So again, watching this area here for bulls. Ideally, you'd like to see a failed breakdown and then a positive continuation to the upside. Again, a 5-day narrow range here could lead to a 6+ point move up ahead once expansion occurs. Okay, let's take a look here at gold futures. Gold futures right now showing a bit of weakness here. Again, this has been mostly range bound with a downward bias at the moment. A lot of chop around the 1960 level, the edge up here around 2000, down here around 1910, and you've traded mostly around those areas. Here to begin the month, failure here, rejection at the mid, and continuation Narrow 4-day range with a downward bias as the previous month's midpoint has been a failure point there for the month, and that opens up the previous low up ahead. So about 1912 could still be down below. Ideally, on a downside break from a narrow range like this, you want to see price continue to maintain those losses for a continuation down. A push back above 1940 and a close back above 1940 again leads to further chop here within the range. All right, let's take a look lastly at the YM. The YM down about 0.2%, but it's currently inside day, opening here in the lower half of the previous session's range. Very narrow, 82 points of range. That's 28% of average, 27.7%. Look how narrow this range is. We do have some economic data points coming out today, but nothing significant. Again, Wednesday morning prior to the RTH Open, we have core CPI data, which could provide some movement out of this narrow developing 2-day range. So again, watching down here to see how price responds to prices below the low. A bullish reaction sends us back up within the 2-day range. Failure to hold the previous session's low, and you start working to the previous week's close price down below near 34,600. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.